Georgia. Georgia is an emerging free market economy which is located at the intersection of Eastern Europe and Western Asia with a population of 3,989,167 in 2020. COVID-19 pandemic or coronavirus pandemic was first identified in December 2019. The coronavirus has been spread to Georgia when its first case was confirmed in Tbilisi, which is the capital of Georgia, on 26 February 2020. This pandemic has hit Georgia in various aspects and also affect the economy of Georgia badly. The economy of Georgia is expected to expand to 4% in 2021 and then to firm this up to 5% in 2022. Despite the expected improvement in the economy of Georgia, the output is unlikely to recover due to the pre-COVID levels until late 2022. The National Bank of Georgia, NBG, released a statement in which it says that the recent depreciation of lari, which is the currency of Georgia, is linked to the uncertainty caused by the coronavirus outbreak that has been transmitted to the financial market through the channel of expectation. For the next part, we will discuss more about the macroeconomics in Georgia.
Economic growth. Georgia has a strong record implementing economic reform and the rising living standard of its citizens. The economic growth has been solid in the average of 5% per annum between 2005 until 2019, and poverty national measure declined rapidly to 90.5% in the year of 2019. Almost half of 2007 rate has been spurred by the sound of macroeconomic policies and the improvement in the government. However, the economy has not created sufficient employment and many Georgians have been engaged to low productivities such as agriculture. The growth rate by the economy in Georgia from 2000 until 2018 has been increasing and decreasing, and the growth rate for the recent year of 2019, which is at 5%. Debt in Georgia. Georgia currently owes 18.8 billion in external debt based on the National Bank of Georgia. During the second quarter year of 2020, the gross external of Georgia has been increasing to 435 million. Out of that, 202 million was increased due to the exchange rate changes. Now, 199.4 million was decreased due to transaction. 33.2 million increase was due to the price change, and 370,500,000 due to the other changes. The other data balance payment, which indicates how much money entered and left the country. The National Bank of Georgia said Georgia's current account deficit is at 337.1 million in the second quarter of year 2020. The trade good and the income account made a negative contribution into the current account, while service and the current transfer was positive. The current account deficit increased by 97.3% based on the National Bank of Georgia.
Now, I will present about transaction in Georgia. According to the World Bank Group, that Georgia is a country ranked at the third least tax burden country in the world with 9.9% total tax rate. So, in the Georgia, taxes are collected on both state and local level. The most important taxes are collected on the federal level. These taxes are included income tax, corporate tax, and value-added tax.
There are 6 flat tax rates in Georgia are collected. The first one is personal income tax are collected at a flat rate of 20% for local income, and for foreign income the tax is exempted. Next is corporate tax at 15%, value-added tax or VAT at 18%, excise tax are collected on a few selected goods, import tax from 0%, 5% and 12%, and the last one is property tax up to 1%.
Next, gross national income per capita in Georgia. So, did you guys know what is gross national income per capita? Let me tell you. Gross national income per capita, or in the short form we call it as a GNI per capita, is the sum of a country's GDP plus with the net income from abroad. Per capita is means population of the countries. So, On 1st July 2016, World Bank published the new classification of country categories in terms of income. This classification to determine income is the gross national income per capita, which is calculated by the Atlas method.
The World Bank divides countries into 4 groups. The first one is low-income countries with a GNI per capita of less than USD 1,025. The second one is lower middle-income countries with a GNI per capita in the margins of USD 1,026 to USD 4,035. The third one is upper middle-income countries with a GNI per capita in the margins of USD 4,036 to USD 12,475. And the last one is high-income countries with a GNI per capita of USD 12,476 and above.
In 1993, Georgia is classified as the low middle income country, and the category did not change for the 12 years after that. In 2015, Georgia has indeed moved from the lower middle income country to the upper middle income country category.
Next, we move to the employment rate in Georgia. It is the big challenge for Georgia since the overcome due to the self-employment. According to the National Statistics Office of Georgia, it published Q3 data of 2020 indication of the economic activity. The unemployment rate in Georgia is increased by 0.7% compared to the corresponding period previous year, and its total 11.9%. In urban settlements, the employment rate in Georgia is decreased by 1.8%, while rural settlements it is by 2.3%.
Now, we move to price stability in Georgia. The Georgian consumer basket contains 305 items of goods and services that are divided into 12 categories. Each component is assigned its own weight, which is based on data from national accounts. Food and non-alcoholic drinks have the highest weightage, about 30% in the Georgian consumption basket. Such a high share of food products in the consumer basket is normal for developing countries like Georgia. Equally, the inflation rate is very sensitive to food price changes. It is also worth noting that food prices are characterized by high volatility that distorts the overall picture of general price level dynamics. As households change their expenditure behavior with time, the Consumer Price Index (CPI) basket is subject to revision, and the Georgian CPI basket is thus updated annually. However, at the recent stage of economic development in Georgia, the gradual reduction in inflation target was appropriate. Hence, from 2018 onwards, the inflation target of the National Bank of Georgia was reduced to its long-run level of 3%.
Foreign trade in Georgia. In the foreign trade turnover, it decreased by 14.8%, that amounted USD 11.3 billion. Total export decreased by 12%, it amounted 3.3 billion, while total import decreased by 15.9%, and it amounted USD 8 billion. The trade gaps are fixed by USD 4.7 billion. Exports from Georgia to European Union EU member states, it is 21.5% from total exports. Imports from EU amounted USD 1.9 billion, which is 24% from total annual import. It is decreased by 17.2% from 2019.
Over the last few years, the economy of Georgia has been one of the fastest and growing in the former Soviet Union (FSU). Since 2003's Rose Revolution, the new government of Georgia implemented broad and comprehensive reform touch every aspect of country's life. In 2013, Georgia ranked in the top 10 countries in the Emerging Market Energy Security Growth Prosperity Index, according to an article published by Citron's Finance News. It shows that emerging nations that have strong growth potential based on their energy reserve and GDP, showing the increasing of economic growth in the following year from 2000 until 2019.
That's all from us. Thank you for watching our video. Don't forget to click button like below. And see you again next time.